Hey Indra, I sent you the Zoom link on your I don't see you in the Zoom. I think you're on the YouTube but not on the Zoom. Go to your Telegram and there's a special link for you there so you can hop into the actual meeting. That way we can discuss. I think you're in the on the YouTube right now. So just pull up the Telegram real quick. Yeah, when I see you get in the room, I can enable your mic, but I can't do it through the YouTube. So you'll have to join the actual Zoom. So let me see when you get in here, I'll be able to enable that. See if there's any trades right now. No, looks like market is pretty slow right now. Little no volatility, no real breaks in structure. This is a crazy spike. I don't know if anyone saw this spike for EG. It spiked like 628 pips. I'm not sure if it was just me, but I didn't even see this happen. But it is on the chart, so we'll see how that plays out. Nothing here for EU, GA. GC. Yeah, volatility is like very, very slow right now, guys. It is a holiday week. If you guys aren't familiar with the holiday week, but yeah, it is Christmas week, so the market's generally going to be slow this week. The only reason it'll be moving if there's something causing these spikes in price, like these stimulus and the coronavirus. All right, perfect. Looks like Indra has made it in. Let me see if I can open this right here. Hey Larry, how's it going? All right, Indra, I just enabled your mic so you can start talking whenever you're ready. Let me see if I could hear you.
Can you hear me, Shawn?
Yeah, I could hear you. Can you hear me?
Yes, I am. Sorry
Okay.
for keep you waiting.
Oh no, no worries. You're just on time. I wasn't waiting very much. All right, cool.
It's about afternoon, right? In your end.
Sorry, can you say that again? Sorry, I couldn't hear you, Indra. I think I could hear you now. It's like I think it's breaking up a bit, but I can hear you.
It's about afternoon, right? In your place.
Oh yeah, yeah. It's 6 p.m. My time right now. What time is it over there?
10 a.m.
Oh, you're on the opposite time, huh? Where are you located?
It's about a day ahead in my place.
Oh, you must be in Asia then, right?
Yes, I'm in Indonesia.
Indonesia. Oh, nice, nice. Yeah, you're like complete opposite of my time. We
16
have
hours ahead.
19 hours. Yeah, yeah. You're in you're tomorrow already, pretty much.
Yes.
Nice, nice.
Our US 13 hit SL this.
Oh, I know. Did you? It spiked down. You know, a lot of this happened because of the news today. There was I was just looking at the news from Trump today because the stimulus was supposed to be passed today. So if the stimulus was passed, you know, US 30 should have been pushed up, but it looks like here that it didn't get passed yet because, you know, obviously there's news and it looked like it pushed down. So unfortunately, you know, it hit our stop loss. I've been doing the testing for our trades this month, and I just did a full back test of, you know, just the trades for December if you let them run to like full TP, and it looks like it's still like net positive. So I think what I might start doing is just letting my trades run, you know, to full TP, full stop loss. Because it looks pretty decent. It says it looks for December, we would have about 6 wins so far total for a gain of like 9,000 pips. So it was good for November. As long as they're net positive, I think it's to just let them run. But I'm still going to keep doing a back test on these. and then I'll see if they work well. If they work well, then I'll introduce it to everyone to, probably just let the trade run
For me, from the first
for it.
beginning until today.
But this is what I've been doing all day today, just doing some back testing.
I see. From the first time.
Andrew, you still there? Just want to make sure you can
Uh,
hear me.
can you hear me, Shawn? Hello?
Yeah. Sorry, I think it was my internet connection. I don't think it was you, it was me. Yeah, sorry, Andrew. It looks like my internet connection may be
A bit drop, huh?
let me check this real quick. Okay, I think I should be good. Can you hear me, Andrew? Sorry, I don't know if there's something wrong with my internet or if it's yours, but I see there's like some connection error for us right now.
Yeah, I'm hear you.
Okay.
My internet down here should be good.
Okay, perfect. I think we're good now. Sorry, I think for some reason the internet keeps bouncing in and out, but I think we should be good now.
I see.
Okay,
But
yeah,
for me,
we're good.
but for me, for the US, but for this US 30,
Yeah.
I think 7 out of 9 or 5 out of 7.
Oh, the ones that you've been taking?
Yes.
Oh yeah, yeah. Well, this month has been pretty decent so far. I think overall it's been pretty good. It's just, recently, just because of the new COVID strain and also with the stimulus, it's been affecting the market because it looks like early in December it was good, like early from like December 1st up until maybe the 18th earlier last week. It was perfectly like you were hitting a lot of wins, and then all of a sudden, just this week, we started hitting some losses for the US 30. Um, I feel like it has to do a lot with the holidays, but also because of the news that's been popping up. Because the same thing happened last month as well, for November. We had a lot of good wins for November, and then around the holiday week, that's when the losses started to pile up a bit.
I see.
Sometimes it's better to just not trade when it's a holiday week because the market just moves a little weird because not a lot of people are trading, so the volatility is kind of bouncing up and down rather than just going smooth up or smooth down.
I think for this coming January it should be pretty good for the US 30.
Yeah, I think so too. I think once the new year starts and there's not any holidays that are getting in the way of the market, then I think it should be able to move a lot smoother.
And also the new presidents for US.
Oh yeah, definitely. When you have Biden, we're not going to have Trump, sending out tweets. Like today, I didn't realize that Trump was, he said something today. He had his little presentation earlier. I didn't realize that he did this today. And then after he did this, there was price all around. So it's unfortunate.
Amazing. Huh?
It's unfortunate, but sometimes we don't really know when this is going to happen, like when he's going to speak.
You're right. Yeah.
So hopefully in January we'll have a smoother run, maybe more straight to TPs rather than holding it for too long. I feel like if we hold it too long, it kind of sometimes it doesn't play out as we would have anticipated.
But for me, the UK 100, UK 100, and US 30 is still in the good profit.
Oh yeah, definitely, yeah. I think it's easier for you to take the UK 100 since you're opposite time. For me, it's midnight when the UK market opens, so I'm already asleep at that time. But for you, I think it works pretty decent because it's been hitting a lot. I think the past couple of weeks.
You're right. Yes.
So which strategy are you applying now? Are you applying mostly just the US 30?
Last this few days, I just applied for the indexes UK 100 and US 30. But from the beginning, I applying your strategy, which is H4.
Oh yes, the SR strategy, right?
Yes.
Oh, nice. Yeah, that works very well with the Forex pairs. I'm not sure if you've been applying it for all of them or if you just trade specific pairs, but all of the calls that I've made for Forex, they've been moving pretty nice. This odd JPY, I don't know if you're in this trade. I'm still in it. I didn't get to exit at TP1, but it's been moving a little weird today. I thought it was going to drop, but it ended up pulling back a bit.
Yeah, for this case, right? Can I talk a bit for this AUD GPY?
Oh, are you in the trade right now?
No, no. I just want to discuss with you for this this typical. I mean this one.
Oh yeah, sure. Yeah, let's talk about it.
Okay, the last signal, the last momentum is a sell signal,
Yes.
right? And then once it's break the support, but it's break with a pretty big candle.
Oh yes, this one right here, correct? This one it broke right here.
Yes. In this case, are you waiting for the pullback or or what are you going to do with those with this big candle?
Yeah, so for this right here, when this broke this structure, I would have taken the trade already, but I would have just taken like a small trade, just to the structure right here for like maybe 20 pips. Uh,
Okay.
yeah, something like this, because you can see here that if you would have taken this trade, it would have hit TP automatic, like right away, and then as soon as it hit TP right there, you would get out of the trade, and then it would retrace back. So once it retraced back like this, then we already made full TP off this entry. Next, we'll be looking for a re-entry. So we'd wait for it to pull back to here, like it did over here. You can see it pulled back, and then when it comes back down, then we can re-enter the trade. So right here, as it comes back down, we would have waited, and then as soon as it comes back down, we could re-enter at this point. Let me see what day was this. This was on Monday, or yeah, this was yesterday. I think we didn't take this trade because this is when the COVID vaccine came, or the COVID strain came out, the new variation. So that's why we didn't take this entry right here. That's why for this one we waited for it to pull back again, because I had a feeling it was going to retrace back, and that's why it retraced back right there. And then as soon as it came back again right here, this is where we made the entry for this point. So that's why I called this trade late, because I waited for the pullback due to the news during that time.
Okay, I see.
Yeah. So sometimes I wait. Usually, if there's nothing that's affecting the market, then I'll enter right away. So this happened, 2 days ago. I entered this, but for this right here, I wouldn't have entered this one because there was, I think that's when the UK announced that they're going to lock down. That there's a lot of stuff that's affecting these specific pairs, because for this, the JPY is a safe haven currency. So if COVID is getting worse, strength will go to the JPY, because people are, they're uncertain with what's going on in the world. So what they do is they put money into the Japanese yen, the Swiss franc, and into gold. So those usually gain in strength when there's uncertainty in the world. Like we don't know what's going on with COVID. If other countries are going back into lockdown, people put their money into certain currencies that are safe haven currencies. So when that happened, that's why I took this entry here, because I was anticipating it to drop a certain amount before it ends up correcting back once there's new updates from the new strain. So that's why we took this trade right here, and that's why we're currently in this trade right now. It dropped and then it hit TP1, but unfortunately earlier I wasn't paying attention, so I removed my stop loss during the swap spread, and then it ended up pulling back slightly. But I think it's going to continue down. There's just some noise here that happened, due to, like, I think this is when Trump made that message earlier with the stimulus. So when he made that message, it obviously pushed price up a bit, because it was strengthening against the safe haven currencies. But it's all speculation. The news doesn't necessarily affect it one way or the other. It's just gonna push price up and down, and then it usually corrects back to where it's supposed to go. That's why I still have this active right now. I'm just waiting for it to come down further from this point.
Okay, I see.
Yeah.
Okay. This is for the swing trade, right? The heads for.
Yeah, I mean, it's sort of like intraday and swing trades, because I know you've like noticed sometimes it hits TP like right away. Sometimes it'll hit right away. Sometimes it'll take maybe a couple hours, and then in some instances it'll take a couple of days. So it's in between intraday and swing trading. It just really depends on how the market's moving. The market's just slow this week because of the holidays. But if it was a normal week, it would probably move up and down a bit faster. in a smoother move, not like spiking up and down because of the news this week.
For this, okay. For this signal, hello.
Yeah, can you hear me, Indra?
Yes, yes, I hear. Okay, for this signal, the H4, are you applying in the D1? Can I apply it in the higher time frame?
Oh yeah, definitely. It actually works better on the higher time frame. So like, say if you wanted to apply, I'll do for example over here. I'll just delete these. Let me look. I haven't tested it on the daily, but I think it works perfectly fine. So let me just go to OddJPY over here. We'll go on the daily time frame. Let me go ahead and draw these zones here. You know, I didn't really think about that. Applying it on the daily, but it seems like it should be able to work pretty nicely, especially for these Forex pairs since there's a lot of noise. But like for me, I don't like holding trades too long. That's why I don't go on the daily. I think the 4 hour is fine for me, but if it does work here, you know, I don't see any problem with it being applied. I think the main issue with it is that it's gonna be harder to catch like these break in zone. So if I go on the daily here, I turn on the momentum indicator. Oh yeah, so this looks like a good entry right here actually for a, you know, a longer hold. So looking at this from the daily time frame, it looks like if you were to take, you know, the sell position right here, looks like you can catch it for a very long drop right here, maybe 85 pips.
100.
Yeah, or even 100 pips. If you want to catch it all the way down here, it's even possible to go even farther, as long as you know you move your stop loss and profit. But let me see, 100 pips. Yeah, this looks very good actually. Maybe I'll take off my take profit, you know, and just write it down because it looks like a very nice, like a smooth move, right? It looks like it can come down. Yeah, because looking over here as well, like looking at the previous entries, like right here we have, you know, buy signal. Obviously, we have a buy signal. It broke structure, and then if we're just back testing it from this point, you know, if we decided to take this trade right here, long position, right there, you know, 100 pips. From there, it looks like it would have played out, right? So if we move forward, wow, look at that, full TP. And then again, if it breaks above this structure, you can maybe take it again. So let's see if it breaks above here. Yeah, I never tested this on the daily, but it looks like it actually works even better than the 4 hour. So again, right here, breaks the structure, long position, maybe up until here. Maybe like 90 pips up to the next structure up there, and then we'll see if it plays. Oh yeah, wow, it looks good. It actually looks a lot better on the daily. It's because there's not as much noise and not as much you know, not enough zones that are blocking it.
I see. But for sure, for the H4, the H4 time frame, we are just looking at the signal, right? Let's say if the signal is a green, it is a buy signal, and we don't care about the candle. Am I right?
Yeah, we don't care about the candle. I think the more important thing is if or we want to identify when price breaks structure. I think that's going to be more important, you know, when price breaks structure. So like for example here, if you're going to take this buy entry right here, you can take this buy entry off the signal, but like in this situation over here where it pulls back into the structure and then
Yes.
closes back above, this can be your entry point as well. So if you're to enter here, this could have been your entry, you know, because it broke the structure here and there's a buy signal. You can enter from there.
Okay.
But say you miss this entry, right? And then you wait for the next one. So say this passes, it pulls back into the structure down here, and then on the next candle it breaks above. So this could be another entry as well. So this could be one entry. This could be another entry here as well.
I see. For sure, you are for your case. For sure, you are not waiting for the pullback, right?
Oh no. Yeah, Generally, you're supposed to take this entry right here. So basically, if this was to happen right here, like say if this pulled back like this right here, and say we missed the trade, you know, sometimes you're sleeping because like for here, this is maybe 2,200 hours. I think this would be maybe nighttime for you, or no, this would be middle day for you. So for me, this would be nighttime. So I might have missed this trade because this is, I think 10 p.m. So if I miss this trade and then, you know, 2 a.m. right here, say I wake up, you know, in the morning, maybe 5 a.m. and then price is, you know, somewhere below here, then I'll put a buy stop right here to enter it if I want to enter late. So that once price comes up, it will automatically fill for late entry. But I don't do this on purpose. I only do this if I miss the trade, you know, when it actually appears.
Okay, no problem. The important part is the momentum and the break the structure.
Yes. The most important part. So for this strategy, you know, there's only two requirements. There's for the K2SR zone trading strategy, there's only two requirements. So like for one, you need to identify, break, and close past K2SR level, which would be the structure. And then second, you're just going to confirm direction of momentum. Sometimes if the momentum, if the signal comes with the break in structure, then it qualifies both the requirements at once. Like for this one right here, since it broke structure and it was a buy signal, then it qualifies for both requirements for all in like one candle. But in some some situations like this right here. So right here we had a buy signal, right? It's invalid, but there's no break in structure. So the break in structure happened way over here. So even right here, if we were to you know, identify this this signal right here, we wouldn't have taken this trade here because we didn't see a break in structure because price was already above the structure from this point. You know, it's been above structure for, let's see, maybe for 3 days already. For 2 or 3 days, it was already above structure. So it's too late to enter, you know, to fulfill this requirement. We would need price to immediately break the structure because you want to catch the momentum when it moves right after it breaks. So for example here, we wouldn't have taken this even though it's above and then we have a buy signal. But over here, this is a different story. Like over here, you know, price has broken the structure. So that's requirement number one. Requirement two, we confirm the direction of momentum. So we have a buy signal right here. That's going to be requirement one, requirement two, and then you can enter, you know, long position with this. So that would be an entry for this one. Do you see the difference?
Yes. For this case, this particular case, I do understand. But can you play forward, please?
I'll play forward. Yeah, sure.
Okay. For this case, I know what I'm going to do. The latest one, I see. I think.
Oh, currently where price is?
Yes. Yes,
okay.
Please.
There we go.
Okay. Which one? Okay, hang on. Okay. Can okay. 1, 2, 3, 4, 5, 6, 7, 8. Can you go to the last 8 momentum?
Oh, last eight. Okay, so 1, 2, 3, 4, 5, 6, 7, 8. This one right here, right?
Okay. That one is a buy momentum, and also the candle is a green candle. That's one candle for two requirement.
Exactly. Yes, 100%. Yeah. So right here, requirement one is identify, break, and close past K2SR level. So you can see the previous candle was within this level, right? And then this one over here broke above it. So that's going to be requirement number one. Number two, you're going to confirm the direction using the, you know, previous momentum signal. Right here was a bullish buy signal. So that's going to fulfill both requirements all in one candle.
Okay, and then the third candle is the second entry. Am I right?
Exactly. You can have two entries. So you could have one entry here, and then you can have another one right here. So you can have two, like if you took both of these, you could have double profits. You have one here for 68 or even more.
Let's say I'm late. Let's say I'm late, and then before that I'm going to tell you that I'm partially blind color.
Mm-hmm.
And 1, 2, 3, 4, 5, 6, 7, 8, 9. The ninth candle is a sell signal, right?
This one right here.
Yes.
Yes, that'd be a sell signal.
Okay, that means we cannot do anything. And 9, 10, 11, 12, 13, 14, 15. 15, 16 is a buy signal.
Yes, this one right here, correct?
Yes.
Yes,
Can I
that's.
can I just take open position after that candle close?
I wouldn't take this one here because the first requirement wasn't met. So we need to have a breaking close past K2SR level. So since there's no breaking close, anytime recently, then it wouldn't count. So say if this right here, if this candle right here closed below here, right? So if this closed below here and then it closed back above this green candle, then you can take the trade. But because what it does, it's kind of similar to like a break and retest. So like it comes back, tests the structure, and then when it comes up and breaks and it closes above it, then that's going to confirm that price isn't going to come back down. So for example, right here, you know how we had one entry right here, right? We have one entry on this candle.
Yes.
So this is one entry. And then again, entry number 2 would be this next candle, right? This green one.
Yes.
So that's entry number 2. And then again, right here, like you mentioned, we had a buy signal, right?
Yes.
So we had a buy signal. It came back over here and then it closed within the structure. See that red candle is within the structure?
Okay.
Followed by a green candle right here, right? It broke the structure and it closed above. So right here would be the entry. So once it closed above, you can take another long entry right there. Then you have 3 entries. They're all going to hit, 300 pips because this will be like maybe 100 pips. This will be another 100 pips. And then again, right here, another 100 pips. So
Okay, I see. That's I miss. Break and close past the K2 structure level. Yes. This one I miss.
yeah. So that's the more important thing is that it breaks past the structure because that's going to give you confirmation that price has had trouble coming below because you can see right here obviously price was retracing. So if we were to rewind over here, you can see price was trying to possibly maybe come back below here, to some extent, maybe break below here and continue lower. But since it pushed right back up right here, it came back, rejected off this structure right here, and then it's followed by a bullish candle. It gives that confirmation of a rejection. So it comes down, it's like a break and retest. So you can see right here, price broke the structure. It came back down from this point. So let me just redraw this. I'll try to make it a little bit easier to see. So this is basically how the strategy confirms. Right here, you see the break, and then you see it retest the structure right here, right? Comes right back down, retest the structure. So as it retests the structure, it closes back above. This is going to give, indication that the bears, they're too weak right here. So they're not able to break through it. So with this bullish candle, it's going to confirm a bullish move back up. So then if we fast forward right here, you can see that it does that exactly.
This one I miss. That means I have to break the structure and come back up and close above the structure.
Exactly, yeah, because it's going to confirm another move. So when this happens right here, when it so say it breaks the structure right here, right? Then the move is basically we're anticipating it to continue up forward. So when it comes back below and then closes above like it did right here with this bullish candle, this is going to confirm a new move. That's why we have 3 separate trades. We have one trade right here. This is going to indicate a move up. And then again, right here, it tested. This is a brand new move. So it tested within the structure, it broke outside, and then this is going to confirm another bullish move. So what we're doing basically is we're trying to catch these breakouts because these when price breaks into a structure like it does right here, and then it closes back above, that gives you a hint, it's hinting you like, a breakout might be happening soon. So right here, you can see it gives you a hint, breakout's coming, pulls back a little bit. And then again, right here, it gives you another confirmation that, the breakout is about to happen. So if you take this trade right here, you can see immediately right after it breaks out very nicely, strong bullish move from this point all the way up here for a nice, 150 pips.
Ah, I see. I see. Yeah, this one I missed. Yeah, I must jot down this note.
Yeah, it's the strategy is very simple, but I feel like a lot of people you kind of overthink it sometimes. It's like so simple. You're like, oh, am I missing something? And then it's really just something little like this, like just a confirmation that it breaks the structure. Because it just gives you a hint that a breakout is coming. That's basically how the strategy works. It's a breakout strategy for the most part.
Okay, but we have to see candle by candle
Exactly.
whether it's break or it's not break.
Yeah, exactly. So that'd be the main thing. If it breaks the structure, that's going to be the main thing that we're looking for.
Okay, but if let's say the candle doesn't match up with the signal, it doesn't matter, right?
Yeah, it doesn't matter. Not for the higher time frames, because usually if that happens where it doesn't match, it can swing back, because sometimes like these markets, they're kind of intertwined with like other markets. So like, I'm not sure if you're familiar with like option trading. Like with option trading, sometimes price will have to be below a certain area, and sometimes like price will be spiked at the last minute, like the very last minute, the price will be spiked up, and then that will cause an invalid signal. But this is still going to indicate that overall it can still push in that direction. Like right here, we have an invalid buy. It does retrace a little bit, but then eventually it ends up pulling back up. So on the higher time frame, it doesn't matter that much, because this doesn't happen very often where it's an invalid signal. But on the lower time frames, you'll see it a lot more often. So they matter for the lower time frames, because you get more signals on the lower time frames versus the 4-hour, daily, weekly, monthly, and up. So for
But
this,
for the lower time frame, the fake out is, but I mean the noise is more higher than the higher time frame.
exactly, yeah, exactly, and that's why it matters on the lower time frame, because there's a lot of noise. You don't want to get caught on fake outs. For the higher time frames, when you get a signal, it usually pushes in that direction for a certain amount of time. If you combine it with these breakout strategies that we're applying. So if you combine the momentum plus the breakout hints that we're getting when price breaks past structure, they go together. So that's why we have momentum plus we have the breakout hint, and then we just ride the breakout as it moves up with price.
What do you mean by the higher time frame? Is are the H4 above or start from H1 above?
Higher time frame, I would consider anything above 4 hour. So
Okay.
yeah, because on the 1 hour, you still see a lot of noise on there too sometimes. It's still not as accurate as a 4 hour. I think the 4 hour and above is going to be the best time frames to trade on, because you don't get as much noise on those time frames. For those, you see a lot smoother moves, and it's easier for you to confirm structure, because if you're trading on the shorter time frame, there's a lot of structure. Structure every time price moves around. But on the 4 hour and daily, you only see structure change maybe every other week, versus the hour you see structure change maybe by the day.
But for sure, the higher time frame, the risk is higher too, right? Compared to the compared to the small time frame.
Not necessarily. If you're trading based on risk, so if you're trading 1% risk,
Okay, the percentage of the risk. Yes, yes,
yeah.
yes.
So like your risk percentage, if you're trading on the higher time frame versus if you're trading on the lower time frame, it's going to be the same thing, because for example, if you're trading 1% risk for a 20 pip stop loss, and then you're trading the same 1% but on a 100 pip stop loss, your lot size is just going to be smaller. It's not necessarily going to be riskier,
I
because
see.
you're just going to lower your lot size. Your profit's not going to be as high because your lot size is going to be smaller, but the risk is going to be the same thing, with regard to how much you're risking and how much you're going to profit with that specific trade.
Okay, before I'm using your strategy, based on the pips. That's why
Oh,
it's bit different right now. But now I change it to the percentage. I mean, based on how many percent of the risk, how many percent the risk against the equity.
Exactly. Yeah. Yeah. So
I see.
the difference with you know, when we trade with risk is because we have a high win percentage, right? As long as you have above, you know, 50% win rate, if your win rate's above 50% and you're trading off risk percentage, you know, as long as you're above your win rate of 50%, you're always going to be in profit at the end of the month, you know, end of the week, end of the year, because you're not going to be risking based on pips. You're going to be risking based on
Percentage.
risk percentage. Do you get what I'm saying?
Yes, yes, I am. This is this is quite I miss as well. I thought if I'm trading with the H4 or above, my drawdown will be more bigger, more yes. But if I base on percentage, that means nothing changed. I have to reduce the lot size if the risk is higher.
Yeah, exactly. Yeah. Yeah, the because yeah, if you're basing it off risk percentage, then you know it doesn't matter which, if your drawdown is going to be 100 pips, your drawdown is 10 pips, it'll be the same thing, you know, depending on what your risk is. And the better thing with the higher time frames is you can like let your trade run. You know, if you're doing 1% risk, you can take the trade and then just let it go for, you know, as long as it's supposed to go. The main importance is just going to be your stop loss, because you know, for some people they like to have a very tight stop loss. You know, some strategies require tighter stop loss. Like for something like this right here, if you were to take this trade, some people like to have their stop loss, you know, like below structure right here, right, somewhere like 42 pips. For me, I always recommend to put it at the swing, you know, somewhere down here, because if your stop loss is too tight, like somewhere right here, you would have gotten stopped out as price, you know, pulled back. But if your stop loss was at the swing, then you would have, you know, survived this pullback right here, and then you would have rode it all the way to full TP.
I
So
see.
yeah, so it's more important to have. I always recommend having a, you know, more cushion for your stop loss versus having a tight stop loss. A lot of people they have a tight stop loss because they think that, you know, if they get stopped out of the trade, they're saving, you know, they're saving a loss. But in some situations like this right here, if your stop loss was a little bit wider, you could have, you know, prevented a loss and then still been in the trade to, you know, continue on to full TP.
They use tight stop loss because they want to make the lot size bigger.
Exactly. Yeah, no, exactly. So trading like that is risky because, you know, sometimes you'll get lucky. Sometimes, you know, it'll go straight to no, like there'll be no drawdown, straight to TP. But most of the time, if you do that, if you trade like that long term, you're not going to last. It's not sustainable because you're going to get stopped out all the time. Because, you know, in the market, there's always manipulation. Like when you least expect it, it's going to drop like it did right here. You know, with this probably should have just went straight up, but uh, it pulled back slightly. So if your stop loss is too tight, then you would have gotten stopped out, and it's just not sustainable from my perspective, because I've traded like that before. And in the long run, it's not very it doesn't last very long. It'll last for like certain, like maybe a couple weeks, couple months, and then you'll get into a month where the market isn't very good. And if you keep getting stopped out, you know, obviously you're not going to make any profit, and then you're not going to be able to last. And you end up with, you know, blown account basically.
I see. I usually use the closest swing I put my stop loss there. In this case, I put the latest, I mean the last swing down.
Mhm.
Can I do that as well, right?
Yeah, yeah, definitely. Yeah. So that's how I do it too. So generally, if I was going to enter this position right here, I would put it at the previous swing, which should be somewhere right here. But if you want to have, you know, more, if you want to have a bigger cushion, you can always put it slightly below. Generally, I like to put it a little bit lower, because the thing with, you know, the market makers and institutions, they know where the swing is. So they know there's going to be a lot of stop losses in this area. And I'm sure,
Ah,
yeah. And I'm sure you've seen it before. You see sometimes price will go very close to here, right? Go like very
yes.
close. And then right after it goes straight to your TP. So that's why I like to leave some space right here, so that sometimes if it goes this far, you can still be in the trade and not get kicked out.
Because you are very sure with this system. That's why the percentage of winning is higher. You don't want to get stopped out more often, right?
Exactly, yeah, because it's such a high win percentage that I trust the system. I've done this back test. When I created this strategy, I think I back tested maybe, I always try to back test at least 5, 10 years back. That's why we have a big sample so that I can identify, what are the problems with the strategy? There's something that needs to be changed, or, maybe the stop loss is too tight. Maybe it only works with certain assets. But like for my back test, I figured that most of the time there's going to be noise. Like right here, obviously there's noise, right? You see this bullish move, but there's noise for maybe this much over here before it actually goes to where it's supposed to go. So if you look at this here, there was like, consolidation for maybe 6, 7 days. Yeah, 7 days consolidation. And then as soon as it broke out of consolidation, it shot straight up to where it was supposed to go initially.
Okay. Have you ever do the let's say the henceforth time frame confirm for buy signal? Then you go to the 10 minutes time frame for scalp.
Oh
Have
yeah,
you ever do that?
yeah, yeah, definitely. So I do that too sometimes. So sometimes what I'll do, I will set up, the 4 hour entry. So something like this, right? 4 hour entry. And then, once we have this set up here, then I will go on the lower time frame, say like maybe the 30 minute, maybe the 1 hour, and then I will take more trades within here. So once we get to this point, then I will possibly, take more trades from here. I like to use the pivot strategy when I'm doing this. I'm not sure. Are you familiar with the pivot strategy? So I turn on the pivots.
It's a Fibonacci numbers there. 8, 13, 34, 55.
Yeah, it's very similar. So it's similar to the Fibonacci. The difference with the pivots is that it's dynamic. So it moves with price. Fibonacci, it stays in place. With
Okay.
yeah, with the pivots, it moves with price. So as price moves, you can you can identify as it continues to move further. So if you wanted to scalp here, right here we have a pivot entry where price comes up, retracement, rejection right here, buy signal. You can take a long position right here. So within this move, you can have even more profit. So you have the full move, and then you also have the scalp right here, 16 pips, and then you can continue to trade that as price continues to move further.
For sure, in this technique,
Mm-hmm.
if the H4 is a buy signal, is a valid buy signal, we go to the lower time frame. We are looking for the buy only. Am I right?
Yes, that's correct. So since on the 4 hour time frame, we already have we have a bullish bias right here. Like we're looking only for like we're anticipating price to hit our full TP on the 4 hour time frame. So when you go on the lower time frame, we're just trying to catch these pullbacks, right? So because obviously we want price to go to full TP on our 4 hour time frame, the H4. Every time price pulls back, we basically just buy the dip. So price comes up, comes back down, then you could, get a buy signal, you buy another dip. There's a lot of ways to apply it. You can even do something where it's like, this is like one strategy that I don't teach, but it's something that I do sometimes when I trade. So if I'm going for this full move right here, whenever price comes and retests the structure, I sometimes enter buy positions right there. So I'll enter another buy position right there, for another gain right there. Again, over here, price comes down, test the structure, another buy position, another TP right there. Again, right here, test the structure, and then you can insert another buy position off there too. There's a lot of ways to apply it. It's just, I try to make it very simple for people. So I don't teach these more complex strategies, but obviously if you know how to trade. Oh, sorry. Could we say it again? I couldn't hear you.
I do that sometimes.
Oh, yeah, yeah. Nice. I see. So yeah, this is something that you can apply. It's something that I don't really teach, the members, because I don't want people to get confused. I want to make sure that they understand, the basic strategy, the SR strategy first. And then when we do these mentoring sessions, I can teach you more complex things. Because obviously, I've been trading for a while, so I know more complex strategies, but I try to keep it very simple so that there's no confusion. But, for you, since you understand this already, it's easier for you to pick up on these more complex strategies.
But for sure, if the lower time frame, I just see the candle retest the support, and I open the position. I don't care the signal and the candle. Am I right? We don't look at the signal, the momentum. I mean,
On
we
the
are not waiting. We are not waiting for the buy momentum to enter the trade. Am I right?
yes, that's correct. That's not what we're waiting for. We were the more important thing is to wait for the break in close past structure. So the more important thing would be, price breaking past it. The second confirmation is going to be the momentum, so that that you're trading in the proper direction. Because obviously, price breaks above, you're not going to take a sell, or if it breaks below, you're not going to take a sell if momentum is going in the opposite direction, because it's probably just minor retracement before it continues to move where it's supposed to go.
I mean, in the lower time frame, we confirm for the H4 is a buy momentum, and we set up the position like this.
Yes.
And then we go to the lower time frame.
Mm-hmm.
On the lower time frame, let's say 30 minutes.
Okay, 30 minutes.
In this time frame, we are not waiting for the buy signal. Am I right? As long as the candle retests to the support.
Oh yeah, you can do that too. That's another way to do it. So like right here, you can see price, breaks into the structure. As soon as it breaks above right here, you can take, another long position right there.
But for sure, that's the safest place to start to trade, right? Rather than you open, you take 1, 2, 3 candles below that.
Oh, like down here.
Yes.
Yeah. So technically you can, but since we're doing like, top-down analysis, we go from the H4 to down to 30-minute. It's better to get the confirmation that, price has confirmed, break and retest, because price broke structure, came back, retest, and then broke out again. So when this happens right here, it gives you a better confirmation, because right here, you're just guessing, if this comes back right here.
You're right, I'm guessing, yes.
Because you don't know if this is going to, break below and then continue further. Because the last thing you want to do is enter, a long position here because you think it's going to come down, and then it comes back, it comes even further, and then it stops you out before it ends up going back up. That's why I wouldn't do that to just guess, because that's how a lot of traders trade. They like to.
I'm praying on that state.
Yeah, because in a lot of situations, there's a lot of people that try to counter trend trade. So they say that they see this as, price is coming back down, and they try to predict where price is going to reject.
Discount.
Like it would play out in some situations, but so this is what usually happens. So when people want to counter trend trade, they'll enter like a buy limit, right? They'll enter like a buy position right here. What they do is they put their stop loss really tight, like right below here, at the structure. And then you can see right here, price comes down and it breaks below the structure. So it stops them out of the trade. And then as soon as it comes back up, it shoots, very high, and then it would have hit full TP at this point.
That means in the lower time frame, we have to wait until the price confirm for shooting up.
Yes, it's the same strategy, except you're not going to look for a momentum anymore, because you already have the momentum on the 4 hour, right? Because you already know that price is going to be going upward. So like right here, if we take this off and we don't look at the momentum, we're just looking for price to break the structure, right? So price comes below, breaks the structure. It gives you confirmation that a breakout may be happening soon. So it gives you confirmation breakout's going to happen soon. Enter long position right here, and then you let it run to full TP right there.
And in this case, okay, stop. In this case, once we open the position, what is the best SL and TP at this moment?
Oh, if you're to enter this trade right here?
Yes. What is the best stop loss and a TP?
I would put it, so this is going to be a little confusing here because I generally would put it at the previous swing, which could be right here. But
Okay.
the thing is, it can also be down here. There's a lot of different swings here. So if I'm going to enter this trade right here, what I do generally, like especially on the shorter time frames, I just hit this zoom out button, reset the chart. I click that,
Okay.
and I click the long tool, and then I place it, and I let TradingView do it for me because the TradingView will identify where the swing is. So you can see right there, it identified the swing at that point.
Ah.
That's a little trick that I do sometimes because sometimes it's hard for you to really identify, should I put it here? Should I put it here? Should I put it here? What happens is TradingView, they pull the data. So when you hit reset chart, it pulls the data from all of these candles right here. You see all the candles on the chart?
Yes.
So it will pull all of this data. It'll grab the average for this where the swing should be. So if you do that, you click long position, TradingView will automatically calculate it for you. You place it there, and you can see it's automatically placed. So when you let that run there, it's perfect, on point.
Ah. Okay. Okay.
It's a little
Okay.
trick. A lot of people don't know that trick, but it's something that you can definitely use. And I'll show you again right here. So maybe if I could find another entry over here, I think there's another one where it breaks below. Okay, so like right here again, right? We'll wait for it to close above. Okay, right here, same situation, structure, right? We hit the reset button. I hit the long tool right here, put it right there, and you can see that it automatically plots where the average is for where your stop loss should be with the data of these candles right here. What it does, it basically gets the ATR. It's like the average true range.
Oh,
So
the 80. Oh.
it takes like all of the data from all of these candles, and it figures out and calculates where your stop loss should be. Obviously, you can always put it below if you feel more comfortable with it below the where the swing is. But
Okay.
me personally, I usually do this all the time if I'm using the shorter time frame, and it works out pretty fine. See, it's perfect. It's straight to a TP right there, and then it comes back down. You see how perfect it is?
Yeah, yeah, yeah. I just noticed that.
Yeah, it's a little bit that a lot of people don't realize because a lot of people don't really understand TradingView very much, because TradingView is still new to a lot of people. For me, I've been using TradingView for a long time. So I kind of figured out all these tricks with the using the computer. Like even for the K2SR, a lot of people they draw their own zones and they draw them in the wrong places. So for me, I created, my own indicator so I can get them at the proper places so that I know exactly where is it supposed to be. Because so like right here, say if you put your stop loss lower, right? Maybe
the,
below here,
leg-
like
the
30
last swing.
pips, you might have not hit TP there. So let me see if we yeah, so you would have missed the TP if you put it at the swing. See what I mean?
Ah.
The trading view is smarter than you. That's why I never question trading view. It's a computer, so it's going to calculate it as it should be calculated, not based off your guess right here. Like if you guess that your stop loss should be below the swing, you would have missed this, and then it would have pulled right back down.
This is I have to apply on my trading.
Yeah, and it helps too with scalping because sometimes when you scalp, you don't know where to put your stop loss. Sometimes you put it at the swing, sometimes too close. Sometimes you put it at the pivot, sometimes too far. So for me, I just use TradingView. I zoom out, get all the data from the chart, and then I just let I let it place it for me. And it's usually pretty on point. Like you saw here, it's very on point with this specific one. Let's see if we could find maybe another entry here. We could try it again. Okay, again right here. So we hit full TP there. There's another entry over here.
Yes.
I will zoom out from the chart, use the long position tool right there. And then you can see that it put the stop loss right there, about 21 pips. So if we let that run there, see, it's perfect right before it comes down. See?
Why so magic?
Amazing, right? Yeah, it's a tool that a lot of people don't know, but it's something that I've been using for a long time. That's why when I set when I send signals, it's exact. Like sometimes it'll go straight to TP and then it'll come back down because I use this little secret here where you hit TP and then it comes straight back down. And it's very, very useful.
You just put the long position there, the SL and the TP. You let the trading view calculate for you.
Exactly. Exactly.
Okay. This is another note.
Mhm.
Thanks a lot, Shawn.
Yeah, no, definitely. That's why I don't like using MT4. You know, a lot of people like to use MT4. For me, it's just too outdated. I like TradingView. There's so many tools here that a lot of people don't realize are able to be used, and they're very useful.
I use trading view. I think less than a month.
Oh wow, so you're brand new to it. You're gonna like it.
Okay, I see. Yeah, yes. This is a new for me. But the difference with the 10 minutes time frame, the candle and the momentum must match.
Yes. So anything below the 4 hour, you should match the candle with the momentum. So and it's specifically due to the noise in the market. You know, there's a lot of noise in the market, especially on the lower time frame. So that's why you want to make sure that it's proper, because you'll get a lot of signals. Sometimes you'll get one buy signal, maybe two candles later you get a sell signal, and then you're going to be confused. You don't know which one to take. So generally, you want to take the one that actually is matching for the most part.
Okay, I see. Okay. One more last question. Can you open the New Zealand GPY, please?
Yeah, sure. Let's go there. New Zealand JPY. There we go.
The hits for time frame.
There we go.
Can you uh, put the momentum signal? Last time is my. That means if you okay, this New Zealand GPY, can I say is a bullish trend? Am I right?
Yeah, we're priced currently. Well, I wouldn't necessarily. Let me see here on the pivots. It looks like it's kind of it just shifted. So you see right here where it shifted
Okay,
downwards.
okay.
So it was,
Crossover.
yeah, it was bullish right here. This would have been bullish for me if I was looking at it from maybe say like this perspective right here. Right,
Yes.
this would have been bullish for me. But then as soon as it started, going sideways this way, then I would wait for it to break within this or outside of this range. And then as soon as it broke outside of the range, then it would shift from, an uptrend to a downtrend right here. So in order for me to identify this, because, it's kind of hard to see if you're just looking at the chart, if you're kind of confused with the direction of the trend, what I do is I just turn on the pivots and it gives you a better visualization. So you can see price comes up, retracement, comes back up, retracement, goes sideways now for this, sideways movement this way. And then as soon as it breaks the pivot this way, and you can see it's starting to angle downwards and spread out. The more spread out they are, the heavier the trend. So now it would be downtrend. You can see here, obviously, when it's spread out and it's angling, it's very strong uptrend. But then once it starts to cross over, that's when it becomes into consolidation, like somewhere right here.
I see.
Yeah. So this is like an easier way to identify the trend versus just drawing your trend lines, because that's the reason why I created this, is because a lot of people draw trend lines like improper. Sometimes they'll draw a trend line like this, but sometimes you don't know where to connect it. Sometimes people connect it like this, sometimes down here, sometimes over here, sometimes over here. It just really depends on how people draw the trend line. So in order for me to be more accurate, that's why I created the pivots, because the pivots help to identify the trend. Like if you're to zoom out from here, it's easier for you to identify just by looking at it. You can see, obviously, prices trending up here. It's a obvious uptrend, and then again over here, it's going sideways, and then as soon as it breaks below, it starts a new downtrend from here, and then vice versa over here as well. Prices trending up, it breaks down below from this point, And it just makes it easier because sometimes if you're drawing your own trend lines, it kind of gets a little messy or it's kind of hard to read. But if you have the pivots, it shows you a better picture as to, you know, where it's moving.
Okay, I see.
Yeah, so that's the way that I use it. I mean, you can use other ways too. Like if you want to use the trend meter as well, you can use this too down here. But you can see during COVID, it's kind of hard to get, you know, an overall trend on multiple time frames because price is always going up, then it's coming down, and then it's kind of hard to see. But it'd be an extra confirmation. So if you're using the trend meter right here, whenever it's blue, that's going to help you identify that it's in consolidation. So if you see that there, you'll be able to see that, you know, from this point up until
That one is.
yeah. So if you just line up, you know, the blue right here with current price, you can see that it's in consolidation.
Oh, yeah.
It'll help you identify breakouts. So say if you have this here, you turn on the momentum indicator, you can see that the previous momentum is bullish, right?
Yes.
So, as soon as it breaks outside, like it did right here, you can take a long position from there as well. See?
That's another strategy.
I have a lot of strategies. It's just I don't teach the ones that are more complicated because a lot of people get confused. I don't want them to be confused, so I just I keep them to myself. But if it's someone that I know that, you know, actually understands it, then I'll teach them it as well. So like right here, same thing right here. You can see it's in consolidation, but then as soon as it breaks outside, so you can see the most recent signal right here is a sell signal, right?
Yes.
We have a sell signal. It breaks below this structure right here. You can take a short position and then write it down from there. It's very easy, very simple. You know, I've been trading for so long, so like for me, I have a lot of strategies. I just don't teach everybody all of them because you know, obviously people get confused sometimes. But like you see here, it's very easy strategy as well. Price breaks the structure, it goes up. Then it goes sideways. Price breaks the structure, then it goes down. Because the thing with the market is it only moves like, you know, it goes up, goes down, goes sideways. It's only 3 different ways to move. It's just, you know, as long as you can identify them, there's ways to create a strategy around it. So there's a ton of strategies that you can apply with the K2 indicators. Like that's why I always tell people that the indicators can be used with any strategy. You don't have to use it just for the K2 strategy. A lot of people have like their own strategy and then they use the indicators to, you know, make that strategy better because sometimes there's a lot of subjectivity. Like there's never like rule based. For all my strategies, they're rule based so that there's no margin for error. You know, if the requirements are met, like right here, you know, for this specific strategy, you can wait for consolidation. And then, you know, another rule that you can add to it is, you know, confirm the momentum like we did right here, and then confirm the breakout. So that's the strategy right there. I just created off the top of my head. You know, you wait for consolidation, confirm the momentum, identify the breakout or the, you know, breakout side structure, and then you take a long position. So it's really easy. If you have a strategy that you like to apply that, you know, you're really comfortable with, I can always help you, you know, develop your own strategy using the K2 indicators. Because the like my thought process when creating these indicators was to cover all aspects of strategy, right? So like for the trend is like one of the most important things. You know, if you're able to identify the trend, you can pretty much be set for like any strategy. So I created the pivots, I created the trend meter. That's like number one. Number two is, you know, identifying structures. If you want to identify structures, I created the K2SR indicator so that you can identify that. And then, you know, on top of everything, the most important one is probably the momentum indicator because a lot of people, they have trouble identifying the direction of price, obviously. You know, identifying trend is easy. You can just draw trend lines. Identifying structure is easy too. You can use, you know, support resistance. But identifying the momentum is the most important thing because a lot of people don't understand how to identify these momentum swings. So, I mean, there's a lot of ways to apply. There's not just one way. So if you ever have any ideas, we can, you know, get on a session again and I can help you, you know, develop your own.
This strategy, it looks nice.
Oh yeah, no, it's a simple strategy. You know, just looking at it right here, you can even see.
Waiting until the consolidation over, break out, and then write the trade.
Exactly. Yes, yes, definitely. So like right here, another situation right here, you see the consolidation from this point. So you can see it started to be blue somewhere around here. So like we have a lot of consolidation right here. You can see it's blue. So we drew the zone right here, consolidation. Price broke outside the consolidation right here, and then you confirm the sell signal, and then you can catch the sell right there for like 80 pips, maybe 100 pips if you wanted to continue.
Yeah, this is one of the kind.
So this would be like similar to like a sniping strategy, because you're waiting for this consolidation phase. Like right here, also, you have the consolidation from, let's say, this point right here. So you have consolidation up until maybe over here. So same thing again. You have the consolidation right here. You have the sell signal. It closes below here, and then you take another short position right there, and then full TP again. Very easy, very easy, very simple. So this is a good strategy too, but it requires more patience because you have to wait for it to break outside of the consolidation. So this could take days. You can be waiting, let's see, like maybe like 15 days before you get a good entry. But then once you get it, it's a very nice entry. So
I
this is something that you can apply as well. I mean, there's a ton of ways to apply. Even again, right here, it's a long consolidation phase right here. Let's see, price consolidates from right here. And then as soon as it breaks out right here, see price break above, we had a buy momentum right here. You could have taken another, long position right here as well.
okay, I see. Yeah.
Yeah. So if this is something that you like, this is something that you can practice. I mean, there's a lot of different ways to apply it. But it's pretty easy. I mean, once you have it down, like once you know what to look for, it's easy for you to apply because you just look for when price is consolidating. So like it's very simple too because you have the trend meter down here, so you can see prices consolidating right here. We have the blue trend meter down there.
Okay.
You can like pretty much just wait for this to break out of consolidation. So like same situation here. You turn on the momentum indicator. You see that the most recent signal was a buy signal. It breaks out right here, take long position, and then there you go right there, hit full TP. So this strategy works very well too. I mean, there's a lot of ways to apply it. But this is, I use a strategy similar to this, I think like a couple years back when I was adjusting to the higher time frames.
Okay.
Yeah. The only problem with this strategy is that you have to be patient for the entries. A lot of people don't like to wait for entries, especially for the signals. People want signals every day. So that's why I had to adjust it so that people can be happy with the signals every day.
The more signal you get, the more the highest percentage of losing the trade.
Exactly. Yeah. More risk. Like when people complain about the trades, I was trying to explain to them that it's better not to take so many trades because your risk goes higher. If you take 4 trades, you can maybe lose all 4. It's high risk. If you're taking like 1 trade, but it's a good trade, then your risk is obviously going to be lower and you have better win percentage at the end of the day. So that's how I like to trade. I like to trade, more quality trades, a higher win percentage because, if you're consistent and then you keep applying that strategy over and over and over again, like the K2SR strategy, that one has a high win percentage. So if you just apply that every single day, at the end of the year, you should be in profit, heavily because your account what's the word? It begins to compound over time.
Compounding, yes. I see. Okay, I think should get all the question now.
Thanks. Yeah. Yeah, definitely. Yeah. If you want to practice this, feel free. And then if you want to have another session at some time later, like maybe you can practice it for a bit. And then if you run into any issues, any problems with the strategy, then we can go over it again and then we can figure out, what solution we can use for that specific issue. Because there's always a solution. A lot of people don't realize that. But for any strategy, if you're losing a trade, there's always going to be a fix to it. You just have to figure out what the problem is, and then from there you can adjust and then make the strategy better.
Okay, thanks a lot, Shawn. I try to to make it smooth, this strategy.
Yeah, definitely. Yeah, this is actually really good. I haven't looked at this strategy in a long time. I'm glad that you mentioned it because I haven't done this in maybe a year or 2 years now. But it looks like a good strategy, maybe a good like long-term strategy. I can just buy it and hold it, or let's.
Because I believe in one cycle. I mean, let's say in 1 year, the good, the good trade is about less than 20%.
Mhm.
The rest 80% is a sideways market.
Exactly. Yeah. So the thing is, if you're able to identify consolidation cycling market, you can catch the breakout. You can be very profitable just taking a few trades a year, maybe one trade a month, and you could be good, cover the whole month.
That's why this is the quite important part. Yes. Thanks a lot, Shawn.
Yeah, definitely. Yeah. So yeah, if you have any other questions, just feel free to reach out. Otherwise we can have another session at some point in the future if you have any more questions to go over.
Thanks for your help. Thanks for your time. And also, I'm sorry for my bad English.
Oh no, you're fine. I understand everything you said. You're good.
I used to study in Melbourne back for good from Melbourne in 2000, in year 2000.
Oh, nice, nice.
From year 2001 until today, I use Bahasa Indonesia for my first language. That's why I forget all the the English already.
Yeah, no, your English is good. I can still understand everything you're saying. And then the more you talk in English, the more sessions we have, the better your.
Yes, 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 yes. I don't waste your time anymore, Swan.
Okay, no problem. Yeah, feel free to reach out. I have another session going on at 8, so I'm probably going to take a break for a little bit, and then I'll be back on if you want to sit in on it. But otherwise, you can probably practice the strategy. I think this looks like a very, very good strategy to apply. I might even start using it myself because like maybe one of these wins can cover
Long-term one.
a whole month of trades if we have a decent month, or if it can basically cover our losses if we end up having some losses during the month.
More easier trade and more longer trade.
Exactly. It's a lot simpler, not too much not too much work. You just
Yes,
trade and then you let it go.
exactly.
Yeah, definitely.
Thanks all your help, Sean.
All right, Andrew, no problem. Yeah, so I'll catch you in the chat. If you have any other questions, just feel free to reach out. Otherwise, I'll probably see you on the live session tomorrow.
Okay, thanks a lot. I will.
No problem. See you later.